Hi everyone, what a day today. The SPY managed to turn positive after going much lower into the 546 area. You can see we got below the low here from March the 13th, and then we ended up coming back and retesting this trend line at the end of the session, and so far we have sold off after hours. But let's take a quick look at the charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Trump came out and said countries within the dirty 15% could get hit harder by Trump tariffs. So we're still waiting on that reciprocal tariff day. It's supposed to be April 2nd. So not tomorrow, but the next day we're supposed to get a little bit more news on what this should look like. Not that everything has come out on time, but apparently Liberation Day is supposed to be the big one when it comes to tariffs. For some reason, markets seem to not care a whole lot about this, at least for now. Maybe it's just not being priced in. Maybe markets just don't believe it, but I think that this is going to come to fruition on the 2nd, and I think markets are going to be in for a bit of a surprise there. So we're going to see, and you can see here they mentioned the dirty 15, referring to the 15% of nations that account for the bulk of U.S. trading volume, imposing heavy tariffs and other non-tariff barriers to U.S. goods. So we're going to see if this comes to fruition. These countries here, you can see European Union, Mexico, Vietnam, Ireland, Germany, Taiwan, Japan, South Korea, Canada, India, Thailand, Italy, Switzerland, Malaysia, Indonesia, France, also inside the European Union there, Austria, and he is calling them out for unfair trade practices according to President Trump. So again, I believe this is going to happen. Whether it's now or at some point, I do think markets are going to go lower once this is fully implemented. Looking at fear and greed, we did not move. Markets did not move that much on a closing basis. You can see 21 there. Still extreme fear across all of the major metrics. Put call ratio spiking here today. Interesting to see that. Volatility did go a little bit higher briefly. Safe haven demand, extreme fear. Junk bonds, regular fear. Interesting to see that one starting to go a little bit higher. That's the one I'm most concerned about. It hasn't really moved a whole lot yet, but everything else says we should be close to a bottom, but I just don't think we've hit that final level of support. Moving over to the economic calendar, Chicago PMI actually came in pretty good, but still below the 50 line. Tomorrow we get a bunch of soft data except for the JOLTS report. Want to see how that does. The economy has been weakening. The jobs market has been weakening. We also get Atlanta Fed, which is expected to be quite weak there as well. None of this matters too much until we do get to that jobs data here at the end of the week and Fed PAL. Moving over to the daily chart, you can see we ended up about 0.5%, which is bananas. It's way stronger than I thought it was going to be. We did end up double bottoming. We did overthrow it just briefly. We're right at the trend. Are we going to retest the trend and reject from there? That would be quite bearish. If we can get above it and hold, maybe this is a double bottom formation, and then we're going to see a little bit of a rally into this zone here. This is what I was looking for, somewhere in this zone between 579 and kind of 591 area, and here made sense. But after the really strong close we saw on the Friday, I was looking for kind of a zone here, 535.74, which I thought we would kind of start to see a follow through at least to the 543 area. But we ended up not getting that. We did touch that low. We did overthrow it. Momentum, still very bearish. Volume coming in, interesting. We did see a nice little volume spike on that buying pressure. So maybe this is a more substantial bottom than I thought initially. And you can see it here on the hourly chart. Gapped lower through wicks, rallied up, hit the trend, rejected. For me, I still think this is a bearish structure across the board. Both of these continue to look quite bearish for me. If you watch my weekend video, I still think this is quite bearish. We just had a really strong retracement. And the fact that it was so strong, I was not comfortable holding any short positions into the close, which it's a little bit frustrating. We did see a little bit of selling after hours, but 560, very critical level, trend line, very critical. Hourly 55 EMA, also quite critical. Moving over to the 4-hour chart here on the Tasty charts, you can see we were super extended, way below that lowest ATR band. The Friday was super extended, and then we gapped down even further, got more extended. Still bearish conditions. Your trailing stop is at 562.10, pretty much right in line with that 21 EMA right there, 561.50 right in here. If it rejects from here, then you're expecting a move probably back to this low at least. Lowest ATR band right now, 552.50, so at least a 1% move, maybe a little bit more. I am still expecting this to continue to go bearish. The overall structure here is still very much bearish. You can see the bearish move here. Slight retracement, couldn't even get above the 144 EMA there. and then very quickly rejected to a slightly lower low. Moving over to the NASDAQ was basically unchanged, down only 2 cents on the day. It filled the gap after going much lower, all the way down to 557 after being in the 569 area. So it went down 2% and then bounced to finish unchanged. So there are buyers in here. This could be an initial touch. Makes sense that there are a little bit of buyers in this zone. I am still looking for this kind of area here between 550 and 554, right in this low from September. I think that's where we're going. I also have a trend line there. I think all of this area makes sense. So I am still expecting selling, a little bit more selling at least into this area. That's what I think makes the most amount of sense. Of course, I could be wrong. If this level holds 568, maybe we head back up and start to look for that kind of 492 area. This still looks terrible for me though. We did see a big move down, kind of a bear flag setup, big move down, broke this low. We're going to see if it gets that continuation lower. You can also look at this as a breakdown retest of the 200 and then a big breakdown from there. So we'll see. Critical zone there, clear rejection. For me, everything still says bearish, even with the strength that we saw after the gap down. And then looking at that hourly chart, if you are trying to trade this to the bull side, you really need this 21 EMA to hold. That's at 465.12, my level 464.50. This zone, critically important. Need it to hold a slightly higher low from here. And then you could look for a push up into the 475 area, maybe as high as 477, but wouldn't get too excited about that. Everything for me still says this is super bearish. We were just really extended. We got down to a 12 on the RSI, which is about as low as it goes. Had a bit of a relief run. I'm still expecting this to roll. Maybe we get consolidation and then a roll into the 2 April date. That would be interesting, but definitely some mixed signals today. And then looking at the Tasty charts here on the 4 hour, you can see big sell, super extended, pull back to that 8 EMA on the 4 hour, which is at 468.37. So far, we have rejected a little bit from there. Your trailing stop is 475.57. So again, still expecting sideways consolidation to bearish price action. We were just a little too extended in the short term. Probably should have factored that in a little bit more in my trading today. Moving over to the Russell and the Dow. The Russell did pretty much the same as the NASDAQ, went lower, filled the gap, sold off, still down about 0.5%, still looking for the 195.15 touch. That zone we talked about on the weekend video is closer to here, 191, so looking for that. Everything still says bearish for me, even with the rallies. And then you can see the Dow actually did not give us a slightly lower low. We did go back to 412, touch that level and bounce, finished positive, up 1% on the day. Interesting. Momentum not quite there. RSI, this is showing some buys, so you do have to be a little bit careful here. The Dow is potentially showing some buying price action. So you can see rally up, retest of the SMA, bounce from the SMA. So you're seeing a little bit of RSI strength on the Dow, maybe. Interesting. You can also see we're right at the lows back here from this kind of January time period. Critical zone, 21 EMA, VWAP, all in here around that 420.90 area. My level 418.38. Right now, you could argue bullish off of that 418 level. Moving over to Apple and Microsoft. Apple continues to be one of the best places to be in the short term. You can see up almost 2%. Massive move up to 224.36 after getting back above 217.62. We gapped below it, got back above it and rallied. So holding up really well. Microsoft, not so much. Almost went to our target. The target was the trend line here at 364.88. Almost hit my level as well, 367.07. Threw wicks to that area, ended up bouncing, finding some buying volume. Maybe my trend is off just a little bit. Maybe it should be closer to that wick there, but either way, didn't quite fill the gap. Still seeing selling, so relatively weak compared to Apple and compared to the S&Ps. Moving over to Tesla and NVIDIA. Tesla was down 1.5% or so. We did get back above 255, but we couldn't fill the gaps and we ended up finishing lower on the day. NVIDIA is the bigger story here, I believe, at this point. You can see we went to a slightly lower low from this Tuesday low here, threw a wick to that level, almost got to this zone here, didn't quite do it. Couldn't get below 106.64 on a closing basis. Momentum is still bearish. RSI is still bearish. We filled the gap. We're selling after hours. Probably just extended. Likely to see this continue back to the 95 area in my opinion. That's what I'm looking for, at least short term. Could go as low as 90.69, which is the low back here from that 5 August candle. Moving over to staples and discretionaries. Staples continues to be the massive outperformer, up 1.5%. Discretionaries up only a quarter, basically unchanged at the level 197.14. But look at staples rallying right to the trend, arguably above it, touching the next level 81.85. You have a low, higher low setup here, looking to see if we get to that higher high up in the 85.73 area. Staples looking really, really strong, still showing markets are not looking to take risk right now, which for me means tech should be going lower, discretionary should be going lower. And we are seeing that on a relative basis, but technically not on price quite yet. Moving over to breadth, look at market breadth showing some strength here. So you could absolutely argue off of this move here that this rally could have some legs to it. So you can see we came in, we touched the SMA on the RSI, momentum flipping back to bullish on both of these. Nice little bounce here, rally, higher low setup here after the sell on the Friday. Maybe we get continuation into here. Honestly, this does tell me that after touching support, we did hold and get a bounce. So I actually feel a little bit more bullish looking after this breadth than I did looking at the markets. So S&P's hanging in there, NASDAQ not so much, but market breadth saying that this rally might have a little bit more legs over the next day or two. Of course, you still have to factor in tariffs and the geopolitical risk, but markets by themselves might be showing some strength. Moving over to the dollar here, you can see the dollar ended up going higher on the day. It tried to go lower in the evening session and then rallied into the open. And now you can see we're kind of pulling back slightly, but overall still holding in there. 21 EMA is still your resistance. You could argue maybe slightly higher low setup. We saw selling Thursday into the Friday, thought we might touch 103.6, and you are still in that same trading range, 103.6 up to 104.4. So we didn't touch either of those levels, so technically no change on the thesis. Still could go either direction. Couldn't quite get to this level here on the hourly, so I would argue maybe high, slightly lower high after the rejection. Maybe we are looking for a slight pullback here, but either way, I wouldn't do anything until we touch one of these levels and see what happens there. Moving over to bonds. Bonds continue to be a good place to be. J&K positive 9 cents after almost touching the level. TLT up almost 1%, continuing to look good there. Momentum bullish, RSI bullish. Still expecting this to go higher up into the 92 area, and ultimately I do believe this is going to go back to this 100 area. You can see this is kind of an inverse head and shoulders. If you want to think of it that way, you could see left shoulder head, maybe right shoulder here, looking for that bigger rally up into here. Moving over to the VIX. The VIX continues to show positive rallies here. So the VIX continues to go higher seemingly every day. 4 days in a row of bullishness. We threw a wick here. Is it going to be a lower high? We still held support in here. Momentum is still bullish. RSI is still bullish. So based on this, you would expect this to push back into the kind of 28 to 30 range, back in this previous resistance zone. That is what I expected last week, and that is still what I expect here. So you have some mixed signals for sure. Market breadth holding in quite strong. VIX looking quite bearish for equities. And then you have kind of mixed signals across the board, in my opinion. Moving over to my accounts, I traded extremely poorly. I was looking for a continuation lower, and that rally just continued to go, and I got absolutely squeezed, and I took all of those positions off. Again, I wasn't super comfortable staying short because we did see really strong rallies. In the after hours, we're selling a little bit. The overall structure is still quite bearish, but could absolutely go either way. Volatility quite high right now at a 41.9, so could go either direction. VIX is high, even with markets rallying. Breadth is high. Like I said, could go either way from here. We're at a critical resistance, but we did see some buyers come in on strong volume, so you do have to keep that in mind. Overall, I am still bearish, but you have to account for price action today. Gap down and rally out of that zone is a bullish indicator, at least for the very short term. Let me know down in the comment section what you thought of the charts today. What did you think of the price action? Can we actually hold these levels and go higher? Is the Liberation Day going to crater markets on the Wednesday? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.